Competitive analysis, evaluating the implications of Trump's 2025 agenda on emerging markets. Overview. The return of Donald Trump to the U.S. presidency in 2025 is set to significantly reshape international trade dynamics, particularly impacting emerging markets in Latin America and Southeast Asia. This analysis explores the potential implications of Trump's policy agenda on these regions, highlighting predictions for economic growth, trade relationships, and geopolitical dynamics by the third quarter of 2026. Key predictions and impacts. 1. Trade policy and tariffs. Trump's agenda is anticipated to be marked by aggressive protectionist measures, including substantial tariffs on imports. Analysts project that tariffs could increase by 10 to 100% on key trading partners, notably China, Canada, and Mexico. This policy aims to protect U.S. industries and reduce trade deficits by reshoring manufacturing. Implications for Latin America. Countries like Mexico could face retaliatory tariffs, disrupting established trade agreements and leading to economic instability. However, Mexico's President Claudia Sheinbaum has expressed a willingness to cooperate on immigration and trade, potentially softening the blow. Implications for Southeast Asia. Nations such as Vietnam and Thailand, which have benefited from U.S. investments in nearshoring trends, may experience both opportunities and threats. While some industries could thrive due to shifting supply chains, others may struggle under new tariffs. 2. Interest rates and currency strength. Trump's fiscal policies, including expected tax cuts and deregulation, are likely to support a strong U.S. dollar, which could lead to higher interest rates. This scenario poses risks for emerging markets, as higher U.S. rates traditionally deter capital inflows. Impact on emerging markets. Countries in Latin America and Southeast Asia, particularly those dependent on foreign investments, could face capital flight and currency depreciation. Analysts foresee an inflationary environment in the U.S., which may further complicate the economic landscape for these regions. 3. Geopolitical dynamics. The geopolitical landscape will become increasingly complex as countries navigate their relationships with both the U.S. and China. Trump's administration is expected to renew its confrontational stance towards China, which may compel Latin American and Southeast Asian nations to recalibrate their foreign policies. Latin America. Countries with historical ties to the U.S. may find it advantageous to align more closely with U.S. policies, particularly in trade and security. However, reliance on China for trade and investment could create tensions. Southeast Asia. Nations like Indonesia and Malaysia, which engage in significant trade with China, will need to balance their economic interests amid U.S. pressure. A potential escalation of tensions between the U.S. and China could force these countries into challenging positions. 4. Sectoral impacts and resilience. Emerging markets exhibit varying degrees of vulnerability and resilience to Trump's agenda. Some sectors may thrive while others could face significant challenges. Manufacturing and exports. Countries like Vietnam and India may see increased manufacturing opportunities as companies seek to relocate supply chains away from China. However, those reliant on commodities, particularly in Latin America, may struggle with reduced U.S. demand. Investment opportunities. While some markets might face initial setbacks, analysts suggest that strategic partnerships and diversified investment sources could mitigate negative impacts. Countries with robust fundamentals and proactive policies may attract alternative investments, particularly from non-U.S. sources. 5. National security and economic sanctions. Trump's administration is expected to adopt a more unilateral approach to economic sanctions, particularly targeting nations perceived as threats to U.S. interests. This includes a focus on export controls and scrutiny of foreign investments. Impact on emerging markets. Countries that have historically aligned with U.S. policies may face increased scrutiny and pressure to conform to new sanctions regimes. Potential retaliatory measures from targeted nations could disrupt global supply chains and investment flows. Differences in analytical perspectives. Two primary sources of analysis present differing viewpoints regarding the implications of Trump's policies. Source 1 emphasizes the potential inflationary effects and challenges to capital flows for emerging markets, suggesting a cautious but optimistic outlook for diversified economies that can adapt to changing conditions. Source 2 focuses on the legal frameworks surrounding tariffs and trade policies, highlighting potential litigation challenges that could arise from new tariff measures. This source presents a more cautious view of the immediate impacts on trade dynamics. Timeline of key events. 2025, Trump's inauguration and the anticipated implementation of aggressive tariff strategies targeting key trading partners, particularly China. Q1 2025, initial impacts of tariffs and trade policies on emerging markets will begin to materialize with countries responding to U.S. measures. 2026, a scheduled review of the United States-Mexico-Canada Agreement USMCA may lead to renegotiations impacting trade dynamics across North America and influencing broader market conditions. Conclusion. Donald Trump's 2025 agenda is likely to create significant disruption for emerging markets, particularly in Latin America and Southeast Asia. While some countries may find opportunities for growth amid changing dynamics, the overarching themes of protectionism, aggressive trade policies, and geopolitical tensions will require careful navigation. Policymakers and businesses in these regions must remain vigilant and adaptive to capitalize on potential opportunities while mitigating risks associated with Trump's administration. The analysis of Donald Trump's 2025 agenda and its implications for emerging markets, particularly in Latin America and Southeast Asia, reveals several counterintuitive insights that could reshape existing perceptions and strategies for these regions in the coming years. 1. Resilience amidst protectionism. While many analysts predict that aggressive tariff policies will harm emerging markets, there is a significant counterintuitive perspective that these markets could show resilience and even thrive. For instance, countries like Vietnam and India might benefit from nearshoring trends as companies seek alternatives to China. This suggests that emerging markets can adapt and find new opportunities even in a hostile trade environment, countering the dominant narrative that they will inevitably suffer under protectionist policies. 2. Strong dollar dilemma. The anticipated strengthening of the U.S. dollar due to Trump's economic policies might initially seem detrimental to emerging markets, which often struggle with dollar-denominated debt. However, the strong dollar could also attract more capital inflows into these markets as investors seek higher yields in emerging economies, leading to unexpected growth opportunities. This duality challenges the simplistic view that a strong dollar will uniformly harm these regions. 3. Strategic pragmatism in Latin America. The willingness of Latin American leaders, particularly Mexico's Claudia Sheinbaum, to cooperate with the Trump administration stands in contrast to the anticipated adversarial relationship. This pragmatic approach suggests that regional leaders are ready to engage with U.S. policies to secure economic advantages, thus defying the expectation of widespread pushback against U.S. tariffs and trade practices. For a geopolitical tug-of-war, the narrative often overlooks the possibility that emerging markets might leverage their geopolitical position amid U.S.-China tensions. Instead of being mere pawns in this rivalry, countries in Latin America and Southeast Asia could strategically align themselves with either superpower to maximize their national interests. This complexity adds a layer of agency to emerging markets that goes beyond the binary of victim or beneficiary in the global trade system. 5. Potential for new trade agreements. The expectation that Trump will focus on bilateral agreements could paradoxically open doors for emerging markets to negotiate favorable terms previously unavailable under multilateral frameworks. This counters the belief that protectionism universally constrains trade, suggesting that emerging economies might exploit the situation to their advantage by engaging in strategic negotiations. 6. Retaliatory strategies could backfire. The anticipated retaliatory measures from countries like China could inadvertently incentivize emerging markets to deepen their economic ties with the U.S. and its allies. The expectation that retaliation will uniformly harm emerging markets ignores the possibility that these countries may pivot towards the US to safeguard their economic interests, thereby redefining their trade relationships in unexpected ways. 7. Emerging market fundamentals. Despite the looming threat of tariffs and sanctions, many emerging markets are fundamentally sound with no significant current account imbalances. This point contradicts the narrative that they are overly vulnerable to external shocks, suggesting that some emerging markets might weather the storm better than anticipated. 8. Legal strategies and counteraction. The potential for legal challenges against new tariff measures may not be as effective as anticipated. Given the historical context where few challenges succeeded during Trump's first term, suggesting that adaptability and foresight could yield benefits that are not immediately visible. In conclusion, Trump's 2025 agenda presents a complex landscape for emerging markets that defies simple categorizations of harm or benefit. The ability of these regions to navigate the geopolitical and economic challenges will depend on their strategic choices, resilience, and adaptability in a rapidly changing global environment. Understanding these counterintuitive dynamics will be essential for policymakers and businesses aiming to thrive in the emerging market landscape post-2025. The report on Donald Trump's 2025 agenda and its implications for emerging markets, particularly in Latin America and Southeast Asia, contains several important insights that many readers may overlook. Highlighting these points is significant due to their potential impact on global economic strategies, trade relationships, and geopolitical dynamics. Overlooked key insight 1. Tariff strategies and their global ramifications. One of the most critical yet understated aspects of Trump's policy is the extensive use of tariffs as a tool for economic strategy. The report indicates that Trump may impose tariffs ranging from 10% to as high as 200% on imports from countries like Mexico and China. While the immediate intent is to protect U.S. industries, the broader implications for global trade dynamics are profound. Significance. This aggressive tariff strategy can lead to a domino effect where countries retaliate with their own tariffs, disrupting established supply chains and trade relationships. For emerging markets in Latin America and Southeast Asia, this could mean a re-evaluation of their trade dependencies and may force them to forge new alliances or adapt to reduced access to U.S. markets. The ability of these markets to pivot quickly will be crucial for their economic stability. Overlooked key insight 2. Interest rates and currency strength. The report notes that Trump's economic policies may contribute to a stronger U.S. dollar through anticipated tax cuts and deregulation, potentially leading to higher interest rates. This scenario is significant for emerging markets that often rely on capital inflows and might face increased borrowing costs. Significance. A stronger dollar can create significant challenges for countries with debts denominated in dollars, making it more difficult for them to service these debts. Additionally, higher interest rates in the U.S. may deter foreign investment, leading to slower growth in emerging markets. Countries like Mexico, which are closely tied to U.S. economic performance, must navigate these challenges carefully to maintain economic stability. Overlooked key insight 3. Geopolitical pressure on emerging markets. A critical yet often overlooked point is the geopolitical dynamics that will emerge as countries, especially in Latin America and Southeast Asia, find themselves caught between the U.S. and China. With the U.S. expected to adopt a more aggressive stance against China, these regions may need to carefully balance their relationships. Significance. The need for strategic maneuvering is crucial. Countries like Vietnam and India may find opportunities to enhance their roles as manufacturing hubs through nearshoring, but others may struggle. This geopolitical tug-of-war can lead to tensions in the region, affecting everything from trade agreements to military alliances. Emerging markets must develop strategies to navigate this complex landscape to avoid becoming collateral damage in U.S.-China relations. Overlooked key insight 4. National security and economic sanctions. The report emphasizes Trump's anticipated unilateral approach to national security and economic sanctions, particularly against nations perceived as threats to U.S. interests such as Iran and China. This approach will likely expand the U.S.'s oversight of foreign investments. Significance: economic sanctions can severely impact the economies of emerging markets that engage in trade with these targeted countries. For instance, if sanctions are imposed on Chinese firms, Southeast Asian countries that have significant trade ties with China may face economic repercussions. This highlights the importance of understanding the interconnectedness of global markets and the potential for unintended consequences stemming from U.S. policies. Overlooked key insight 5: Sectoral vulnerabilities and opportunities. The report outlines that emerging markets exhibit varied vulnerabilities and strengths, with some countries like Vietnam potentially benefiting from nearshoring trends while others may struggle due to their reliance on commodity exports. Significance: identifying sector-specific vulnerabilities is crucial for policymakers and investors. Markets must recognize which sectors are most at risk from Trump's policies and adapt accordingly. For example, countries heavily reliant on commodities may need to diversify their economies or seek new markets. Conversely, those well-positioned for manufacturing could capitalize on changes in global supply chains, making this analysis vital for strategic planning. Overlooked key insight 6: Judicial and legal challenges to tariff measures. The report also highlights potential litigation challenges against new tariff measures that may arise, especially given the complex legal frameworks under which tariffs are set. Significance: understanding the legal landscape surrounding tariffs is essential for businesses and governments alike. The potential for successful litigation can undermine the effectiveness of tariff policies and create uncertainty in the market. Emerging markets should consider the legal ramifications of U.S. trade policies and prepare for possible disruptions, including the need for legal recourse. Conclusion: the implications of Trump's 2025 agenda on emerging markets are complex and multifaceted. By identifying these often overlooked insights, stakeholders can better prepare for the economic and geopolitical shifts that are likely to ensue. This foresight is particularly significant for policymakers and businesses in Latin America and Southeast Asia, as they navigate an increasingly volatile global landscape influenced by U.S. trade and economic policies. Understanding these dynamics is crucial for developing adaptive strategies that can withstand the challenges posed by aggressive tariff measures, shifting interest rates, and geopolitical pressures. 1. Trade policies and tariff implications. Trump's anticipated 2025 agenda is expected to implement aggressive tariffs ranging from 10 to 100%, particularly targeting countries like China, Mexico, and Canada. This approach aims to protect U.S. industries and reduce trade deficits, but could lead to retaliatory measures from affected countries, complicating trade relations. The implications for emerging markets in Latin America and Southeast Asia may include disrupted trade dynamics, increased costs of imports, and potential economic slowdowns, especially for countries heavily reliant on trade with the U.S. 2. Impact on currency strength and interest rates. A strong U.S. dollar is predicted under Trump's policies, driven by tax cuts and deregulation, which could lead to inflation and higher interest rates. This environment may deter capital inflows into emerging markets, making borrowing more expensive and curtailing growth. Countries like Mexico, showing readiness to cooperate with the U.S., may need to navigate these financial challenges carefully to maintain economic stability. 3. Geopolitical responses and economic resilience. The geopolitical landscape will likely shift as countries like China respond to U.S. tariffs with their own fiscal measures. Latin American and Southeast Asian nations will need to balance their relationships with both the U.S. and China, navigating a complex environment that could create opportunities for cooperation or exacerbate tensions. Emerging markets with diversified economies like Vietnam and India may find niches to thrive, while commodity-dependent countries in Latin America could face vulnerabilities. 4. National security and economic sanctions. Trump's administration is expected to adopt unilateral measures concerning economic sanctions and export controls. particularly targeting nations perceived as threats to U.S. interests. The potential for expanded oversight of foreign investments may lead to increased scrutiny of transactions involving emerging market economies impacting global supply chains. Countries will need to adapt to these policies, potentially altering their investment strategies to align with U.S. national security priorities. 1. The Smoot-Hawley Tariff Act 1930. This U.S. legislation raised tariffs on numerous imports aiming to protect American industry during the Great Depression. The act led to retaliatory tariffs from other countries, severely restricting international trade and exacerbating economic conditions globally. The backlash against these tariffs contributed to a decline in U.S. exports and was a significant factor in the worsening of the global economic crisis. 2. The East India Company and the American Revolution 1775 to 1783. The British East India Company had a monopoly on tea imports to the American colonies, leading to widespread resentment among colonists. The imposition of the Tea Act in 1773, which granted the company the ability to sell tea directly to the colonies at a reduced rate, was perceived as an attempt to undermine colonial businesses. This culminated in the Boston Tea Party, a protest against British taxation and control, ultimately fueling the revolutionary movement that led to American independence. 3. NAFTA and its impact on Mexico. 1994. The North American Free Trade Agreement NAFTA came into effect in 1994, creating a trilateral trade bloc between the U.S., Canada, and Mexico. While it aimed to enhance trade and economic growth, it had mixed results. In Mexico, the influx of cheaper agricultural imports led to significant disruptions in the agricultural sector, contributing to rural poverty and migration pressures. The agreement prompted debates about trade liberalization and its socio-economic impacts, particularly in emerging markets. Future outlook: implications of Trump's 2025 agenda on emerging markets in Latin America and Southeast Asia by Q3 2026. As Donald Trump assumes office in 2025, his administration's policies are expected to significantly impact emerging markets, particularly in Latin America and Southeast Asia. The following predictions highlight the potential consequences of these policies by Q3 2026. 1. Trade policy shifts. Tariff increases. Trump's administration is likely to implement aggressive tariffs, potentially ranging from 10% to 100% on imports from key trading partners, particularly China, Mexico, and Canada. This protectionist stance could lead to retaliatory measures from affected countries, creating a tit-for-tat dynamic that disrupts global trade flows. Countries like Mexico may face significant economic challenges, particularly in sectors reliant on exports to the U.S. Impact on trade agreements. The renegotiation of trade agreements such as the USMCA is anticipated to take place in 2026. Emerging markets may find themselves re-evaluating their trade strategies to mitigate risks associated with U.S. policies. Latin American countries could push for closer ties with alternative partners, including China, to offset potential losses from reduced access to the U.S. market. 2. Investment dynamics. Capital flows. A strong U.S. dollar driven by anticipated tax cuts and deregulation may deter capital flows to emerging markets. Higher U.S. interest rates could lead to capital flight from these regions, negatively impacting their economic growth. However, countries like Vietnam and India may continue to attract investment due to their strategic positioning in global supply chains, particularly as companies seek to diversify away from China. Nearshoring opportunities. The trend of nearshoring may benefit Southeast Asian countries, allowing them to capture manufacturing activities relocating from China. This could enhance their economic resilience, although it will depend on their ability to provide stable political and economic environments. 3. Geopolitical landscape. U.S.-China rivalry. The intensifying competition between the U.S. and China will compel Latin American and Southeast Asian nations to navigate a complex geopolitical landscape. Countries in these regions may seek to balance their relationships with both powers, potentially leading to new alliances or trade agreements. Regional cooperation. In response to U.S. policies, emerging markets may increase regional cooperation to strengthen their bargaining positions. Initiatives such as the Pacific Alliance in Latin America or ASEAN in Southeast Asia could gain traction as countries seek collective strategies to address challenges posed by U.S. tariffs and sanctions. 4. Sectoral vulnerabilities and resilience. Sector-specific impacts. The effects of Trump's trade policies will vary across sectors. Commodity-dependent countries in Latin America may experience downturns if U.S. demand fluctuates. Conversely, countries with diversified economies such as Vietnam may find new opportunities in manufacturing and technology sectors. Adaptation strategies. Emerging markets will likely adopt adaptation strategies to mitigate the adverse effects of U.S. policies. These may include diversifying export markets, enhancing domestic industries, and fostering innovation to reduce reliance on foreign markets. 5. Economic sanctions and national security. Increased sanctions. Trump's administration is expected to adopt a more unilateral approach to economic sanctions, particularly targeting countries perceived as threats to U.S. interests. Emerging markets may face challenges in accessing U.S. financial systems, affecting their economic growth prospects. Investment scrutiny. Stricter oversight of foreign investments, particularly from adversarial nations, will likely continue. This may deter investment in sensitive sectors but could also lead to increased scrutiny of investments from traditional U.S. allies, impacting their economic ties with emerging markets. 6. Inflation and interest rates. Inflationary pressures. Trump's policies could lead to rising inflation in the U.S. with potential spillover effects on emerging markets. Increased costs of imports may strain local economies, particularly in countries heavily reliant on external goods. Central bank responses. Emerging market central banks may need to adjust their monetary policies in response to U.S. interest rate hikes. Higher borrowing costs could stifle investment and consumer spending, impacting overall economic growth. Conclusion. By Q3 2026, the implications of Trump's 2025 agenda will likely create a mixed landscape for emerging markets in Latin America and Southeast Asia. While challenges such as increased tariffs, capital flight, and geopolitical tensions will present significant obstacles, opportunities may arise from nearshoring trends, regional cooperation, and the potential for diversification in trade partnerships. Emerging markets will need to navigate this evolving environment with adaptability and strategic foresight to mitigate risks and capitalize on new opportunities. Careful monitoring of U.S. policy developments will be essential for businesses and policymakers in these regions.